Good morning and welcome to Stock Market Math. My name is Paul, and today we're going to take a look at everything you need to know before the market opens on June 24th, 2024. So get yourself a cup of coffee and let's get started by rewinding the clock and see how things ended on Friday. Taking a look at the Dow Jones, you can see we were pretty flat on Friday. However, on the 5-day, we were up 731 points. Flipping over to the S&P 500, small loss on Friday. However, gains on the week at 54.32%. And you can see that on Thursday, we crossed the 5,500 mark. Looking at the NASDAQ, small loss on Friday and actually almost flat for the week with a big spike in the middle. All right, I've pulled up FinViz's heat map to show you what things look like on Friday, and you can see some companies did well, some did poorly. However, if we step out a little bit on the timeline, I think you'll see some interesting developing patterns. That's the last 1 week's performance. That's the last 1 month performance. That's the last 3 months. And let's jump all the way out to the last year. Generally speaking, everything has done well in the last year, with a couple of exceptions, such as Tesla, Johnson & Johnson, Intel, and I believe that is Cisco. I'd also like to show you what the price to earnings ratio looks like. And you can see there's a lot of red, which means that right now the price to earnings on most companies is pretty high, historically speaking. Now, some companies tend to have high price to earnings ratios because they're very trendy stocks. There's a lot of money to be made, so you can see that they're very high. Tesla was that way for a long time. Nvidia is that way right now. Broadcom is that way also. But that doesn't mean it's necessarily a bad company to buy. It just means that you're paying a premium for that company. Now, let me flip to the forward price to earnings, and you can see that it changes a lot because some of these companies that are big growth companies are making a lot of money right now. And so that kind of explains why their price to earnings ratio is so high. This week, we have 8 of the S&P 500 companies reporting earnings, with nobody reporting on Monday or Friday. On Tuesday, we have 2 companies reporting, which are FedEx and Carnival Corporation. Wednesday, we have 3 companies reporting earnings: General Mills, Micron Technologies, and Paycheck Incorporated. Thursday, we'll have 3 companies reporting earnings, which are Nike, McCormick, and Walgreens Boots Alliance. United Healthcare Group will be raising their dividend from $1.88 to $2.10 per quarter. Multiplying that by 4 will get a new annual dividend rate of $8.40, up from their existing $7.52. That will bring their dividend yield from 1.56% to about 1.7%, and that dividend will be paid tomorrow, June 25th. FedEx recently announced an increase of their dividend from $1.26 per share to $1.38 per share. That'll bring their projected annual dividend payment up to $5.52 per share, taking their dividend yield from just over 2% to a projected 2.18%. The dividend will be paid on July 9th. Innovative Industrial Properties will be raising their dividend from $1.82 per share to $1.90 per share. This will change their annual dividend payout from $7.28 to $7.60. Their dividend yield should change from 6.71% up to a projected 7.13%. The dividend is expected to be paid on July 15th. Hot stock, cold stock. Today we're going to do something new, and we're going to take a look at the 3 best performing and 3 worst performing companies. Now, this is going to be based on the last 5 days, and I have a couple of rules. First of all, the share price has to start at least $20, so there's no penny stocks. Second, the market cap has to be at least $50 billion or it doesn't count. And third of all, this is based on share price appreciation or depreciation. Dividends do not play a role. So let's get started. Starting off in third place, we have Dell Technology with a share price of $145.06. It is up almost 4% on the week. In second place, we have Accenture PLC with a share price of $308.98 and was up 7.66% on the week. And our best performing stock last week was Gilead Science Incorporated with a share price of $70.67, was up 9.66%. Now, starting off with our third worst performer this week, we have NVIDIA. Now, this will probably surprise quite a few people because NVIDIA has absolutely been tearing it up. They're up almost 200% on the year. But this just shows you that every company has its ups and downs, and every company will have a bad week. Moving on to our number three worst company, we have Coinbase, which is down 4.57%. And over the year, it's up 288%. So, again, great performing company that has just had a bad week. And to my great regret, worst performing company this week, Broadcom, down 7.54% and up almost 95% on the year. Taking a look at the fear versus greed index, you can see that we have a score of 41, which keeps us in the fear sector. And this has not changed a whole lot since last week when we had a score of 38. Thanks for watching. Have a great day. And remember, keep investing.